Hello, Soumya sir, can you hear me?
Yeah, hi Vishu. I can hear you. How are you?
I'm good, sir. Thank you so much for joining.
My pleasure.
Uh, let's just wait for one more minute so more people can join in and then we'll start.
Definitely, definitely.
Hi sir, start करें?
हाँ हाँ करते हैं.
Awesome, awesome. ठीक है. So welcome everybody. Welcome to tonight's show. आज हमारे साथ सौम्य मलानी सर हैं. He's of course an LSE alumnus, which I mean, I'm already so impressed. I'm a fan of his, of course. And he's also SEBI registered research analyst, and he has also written for big names, articles for his, and I am an absolute fan, sir, for sure. So I
Hello,
was
I
requested.
lost your
Hello.
voice. Yeah, now it's fine.
Okay.
Sorry.
Okay. Okay. So I was just saying how big a fan of yours I am, sir. And thank you so much for accepting our request to join us on our podcast and allowing us to learn from you.
You're being too kind in your you're being too kind in your comments. It's my pleasure to be here, and it'll be fun. It's my first time with Spaces, so I'm totally unaware of how this thing works, but I'm sure we'll figure it out.
Awesome. Awesome, sir. ठीक है तो सर आई थिंक शुरुआत हम लोग थोड़ा सा मार्केट सिनेरियो से ही करते हैं आज का दिन वाज काइंड ऑफ फ्लैट बट ओवरऑल पिछले कुछ दिन से वो जो देयर वाज अ रेगुलर करेक्शन कमिंग इन एंड थोड़ा सा पैनिक हो रहा था मार्केट में दैट इज काइंड ऑफ बीन adjusted in the last few days, and today was relatively, it started on a negative note I think, but it relatively ended on flat. So what do you think is your analysis? What is going on in the market right now, and what are you expecting, what are you seeing in the market, sir?
So firstly, few days back I had tweeted also. It was my view. Firstly, I would like to say that yes, I'm a SEBI registered research analyst, but whatever I speak here, I'm just giving my personal opinions, and these are not research recommendations or based out of research advice. So please consult your investment advisor. Now, coming to the market scenario, a few days back I had tweeted also that I feel that the downside from here can be approximately maximum 10% on an index level. And I feel if we pick up good stocks, then on a portfolio level, if you have a 3 year, 3.5 year horizon, you can maybe look to double your portfolio if you're good at stock picking. So this is something that I felt few days back, and till now, market has been pretty rewarding. I feel even if we end up going down again, there will be a lot of stocks and sectors that would have already bottomed out. So I think more than being averse, I think we should be on the lookout for new opportunities now, and maybe even be ready with our price levels in case they come. But the up move that we have seen this time from 15,200, that is a quality up move. It's very different from whatever we saw in the last few months. A lot of participation is there in terms of all the sectors are doing well, be it mid cap, small cap, large caps. And if we look at few sectors also, they are clearly outperforming compared to the indices. So, I mean, we can focus on those sectors and study and try to see what is happening and what is the change that is there in those sectors compared to the earlier periods.
Right, absolutely, sir. Sir, you made a very interesting point on how there may be a sectoral shift happening. Do you see any? Like, what is your thought on that? Which sectors do you think are kind of done with their marathon and race, and which ones are just starting out now? Do you have an opinion on that? And of course, yes, like you said, none of whatever we discussed today, any stocks or sectors, none of it would be a
Yeah.
buy or sell recommendation. It's just for educational purpose.
Right. All these views are my personal views, and I might hold, if I name any stocks, I might hold them in my own portfolio. So just be aware of that. So one thing that I feel most of you guys know is that whenever there is a deep correction in the market, and then when the market starts to rebound, there are always new set of leaders, and and we should always be on a watch out for them. So typically, what a retail investor would do is they would think that okay, this is a particular stock which went up 4, 5, 6, 10x in the last bull market. and it has come down say 40-50%, so that is very cheap. I would say we should stay away from those kind of thoughts. And what one of the things that I do, which I did even during the COVID times, which helped me to pick pharma and IT stocks at the beginning of the COVID run, was basically whenever there is a steep fall, I try to see that which are the stocks that have fallen the least, and then I try to see if I could figure out a sector which is common in them. So if you look at the market right now, then if you look at some auto stocks, they are near 52-week highs. If you look at FMCG, that has been performing well, and banks have also relatively started to do better. So another way of thinking is, I personally like to be with the stocks that are showing strength. I'm not a big fan of doing the bottom fishing or trying to average down or picking the stocks that have fallen a lot, trying to bottom fish. So another way of looking is, you look at the stocks that are doing well and that are hitting new highs, and then you try to figure out that what is happening in that particular stock. Is there any trigger? Because why is that stock not falling in spite of market being so weak? Those are the kind of patterns that I look to follow.
Right, absolutely brilliant. I think, sir, what you said, Nitin Kamath, sir, also said something similar to that. Ki people generally try to bottom fish, but the way to go is probably go for the strong stocks. I absolutely love that then, and I absolutely love that now. So thank you so much for sharing that. That also kind of gives me a segue into get into your personal trading strategy and philosophies. Can you tell us a little bit about how do you do your stock and sector selection, maybe?
So I normally start with new highs. Okay, so you would say that, okay, if the market is very bad, how would you really find stocks hitting 52-week highs? So then I'll go to the stocks that have fallen the least, as I told you. Another way of looking at it is that if the market is coming from a bottom, then I would look at stocks hitting 3 months high or 6 months high, and then gradually move on to say making new highs and so on, 52-week highs and so on. So the idea for me always is to stay with strength. So I'll give you one example. Avanti Feeds became 70x for me, and the year I bought it, and the first time I bought it, it was already double that year. So normally when we look at a stock that is already double, we feel कि अरे यार अब पढ़ के क्या करेंगे? It's already double. I'm late. And you don't even consider that opportunity. You just ignore the opportunity, and that's the easiest way, right? I mean, avoid just find reasons to avoid, and don't do any hard work. But I feel when we land up in the stock market, we want to buy the next Pidilite, the next Asian Paints, the next Hindustan Unilever, or the next ITC. Like the stocks, not ITC performance in the last 10 years, but ITC, has been one of the biggest wealth creators of Indian stock market. So the idea is to find stocks that can become huge multi-baggers. Now, any multi-bagger, any stock that has to become 5, 10, 15, 20 times has to first hit 52-week high, right? And then it would continuously keep on hitting 52-week highs in periodic intervals. So my idea is, I let the market take a judgment. So the market would tell me what to look at rather than me deciding what to look at, because I believe the market consists of the smartest people on planet Earth, right? So why not give them the benefit of it? Now, one disclaimer here would be, like, not every stock that hits 52-week high would become a multi-bagger or would be worth studying also. So now some people would say that, there are so many stocks hitting 52-week high. How would you really filter it down? So the next step that I would do is, I would just do a normal screening. I would look at some parameters that I like that have been common in my previous winners, or some I would just filter them or avoid some stocks based on the parameters which I don't like. So suppose, for an example, I want a company. A parameter that I like could be, I want a company which has promoter holding of more than 60%. Just a random example. And parameters that I don't like could be, I don't want any company that has debt to equity ratio of more than 2. So or 1.5, whatever it may be. So this way we can filter out the stocks, and then whatever the remaining set is, we can then try to work on them fundamentally and technically. And we can also try to see some patterns. Like, I follow some fundamental patterns which I've seen that they are very common in all the past winners, such as promoter change, management change, a leader in a niche segment, or say demerger in a sizable company, and so on. These are the patterns that I've figured out that work pretty well, and I try to find out those in my companies, and then I move on to further research.
Right. Uh, Absolutely brilliant strategy, sir. Thank you so much for sharing that. Sir, the next question that I want to ask you
Yeah,
is, so we kind of understood how you enter your stock.
right.
Uh, how do you decide your exits? Like there are two aspects to it. One is, of course, the stop losses or the risk management of it, and the other is how do you decide that this is the target that I'm going to achieve, or this is enough that the stock is maybe it's the right time to exit and book profits.
So I always tell this to people. One of the reasons why I feel most of us are confused about exiting stocks is that we don't know why we bought the stock in the first place. So until unless you have crystal clear clarity why you bought a particular stock, you will not be able to understand what the exit should be. So exit would depend on firstly understanding the reason why we bought the stock. Okay, I'll just give you an example if this feels a little confusing. So suppose you buy a particular stock technically, okay, and your view is swing for say 3 to 5 days or 10 days, so your exit will be dependent on that view. So the way to judge or trail that particular stock or to take a stop loss will depend on that view. Normally what people do is they buy a stock for swing but they end up making it long term investment, right? So this is what we don't have to do. And secondly, suppose we buy a stock fundamentally, then we should understand that okay, these are the particular triggers that I need to follow. If these four things happen, then it could be beneficial for the company. Anything out of these four, if anything out of these 4 5 happens, it could be worse for the company. It can make company, it can create mess for the company. And then you monitor those triggers, and then you can take an exit. Apart from that, I truly believe that long term charts are very good methods of is a very good method of looking at risk management, because a lot of times if you look historically, all these companies that have been phenomenal winners, be it say Avanti or HEG or even say in the last run Loras and so on. So they make their top of that move much before the best result comes out. Or suppose the best numbers or the best result comes in February, you will see that the stock topped out in December. So the market has a beautiful way of sensing things that are coming up, right? So then we wonder that okay, इतने अच्छे results में stock क्यों गिर गया? So that is where technicals help a lot, and also sometimes how technicals help us, especially long term charts, weekly charts, is we are very confident of our own fundamental study maybe, right? And then suddenly in the chart there is something that just puts you off. The story is so great. Why is this maybe falling below 50-day moving average, weekly average, or whatever? Just an example. So then what it helps me to do is it helps me to question my own thesis. So what I do, I'll go back and I'll see that okay, is there anything that I'm missing? Is there anything that market knows which I don't know? So that way also it really helps to manage risk. So it's a combination of say fundamental and technical, but I would again say that it's very important to understand clearly why you have bought a stock, and then you can take a decision in a better way to how to manage it. Because if you are doing a swing trade, you cannot look at weekly charts, right? If you are doing investment, you look at weekly charts and the triggers that are there fundamentally in the company. I
Right.
hope it's not very confusing, right?
No, no, no. That's perfect, sir. That's absolutely clear. Sir, I also want to ask: do you? So you one is of course fundamentals, and then there are technicals. There's also the macro factors. Do you track maybe the global market cues or the current events that are happening around? Like for instance, Russia में अगर war हुआ तो maybe war stocks may be a little interesting topic to look at. So do you track such? या फिर जैसे I think a while back there was some famine in South America because of which coffee stocks were doing very well in India. So, do you track any global factors as well?
See, global factors are there at the back of the mind. You are aware of them, but I would not say that those are the primary reasons for my investment decisions. I mean, if there is something that also whenever something happens, the only thing as an equity investor I have to do is I don't need to understand each and every part of it. कि ये हो रहा है तो क्या होगा क्या नहीं होगा. What I need to understand is there any company in my portfolio that will benefit out of it? Is there any company otherwise that can benefit out of it? Is there any company in my portfolio that will get harmed? Is there any other company or sector that will get harmed? So immediately we have to think about this as equity investors instead of just gossiping. So normally क्या होता है that people when there is an event we find a lot of fun in terms of discussing things that ये हो रहा है और वो हो रहा है. That's good to do if somebody has interest in macro factors. I would not say it's not good to do, but ultimately that will not give us money or that will not help us generate any ideas. The only thing that will help us generate ideas, so quickly just summarize that what are the companies that will benefit out of it, what are the companies or sectors that will get affected in a bad way out of it because of it. And and once you realize that, the second question that you have to ask is how long can this last? Is this something that could be for a quarter or 15 days, or it could be something that can last for, this trend can last for say a year and a half, or is it a multi-decade trend? So for example, so when COVID happened, so we knew that okay, at least for 6 to 8 months pharma companies will have a lot of boom, especially the ones making API or ones in ARVs and so on, right? Now China plus one, when we look at that theme, that is I feel that is a decade theme. So then your horizon has to be like that. Then you pick up those kind of stocks that can benefit out of it for decades, right? Now, if you look at the war scenario, then my point will be there's a big question mark. You don't know when it ends, for how long will it last, what will be the impact of different impact on different prices, and for how long, because everything can change in a decision. So all these three scenarios we have to take a different approach when we are looking at stock.
Right, absolutely, sir. Sir, next thing that I want to ask is what? So it's a little bit about portfolio sizing, in the sense, how many stocks do you generally keep in your watch list at a time is one, and how many stocks do you invest in? So some people like believe in a very concentrated portfolio, while others are very much into you should keep it diversified. So what is your approach towards portfolio sizing? And maybe if we could even have a number key, this is the ideal number to have, the number of stocks that we have can have in a portfolio.
Honestly, I feel there's no ideal number. If see, it depends on your mindset. Honestly, I'm not trying to give you an answer which is neither black nor white and just trying to keep it gray. But honestly, the answer to this is whatever makes you feel comfortable, right? Because see, if it's just like going to gym, correct? So if you cannot lift 15 kgs or 20 kgs, right? And you just make a concentrated portfolio. I'm just giving you an example. You will break down because your mindset and your ability is not there. And if you just take a remote control and you try to do dumbbell press and so on, you will never have those kind of results, right? So you have to strike a balance, and you have to build that mindset wherein, I feel if somebody is starting in equity markets, they can have even 40-50 stocks. I really don't mind, because that gives them the scope to do mistake and the scope to have that extra winner. But as you gain experience in equity markets, and as you understand markets a bit more, and as you get confidence, you should try and bring it down to a reasonable number. Now, a reasonable number is a factor of your portfolio amount, the kind of stocks that you want to be. Suppose I want to be in micro caps. I can't say that I just want to be in 10 micro caps if my portfolio is massive, right? So, all of those factors, in which segment do you want to be? What is the kind of number of stocks that makes you feel safe and doesn't disturb your mindset and so on. So I feel everything is right. You just have to understand your own mindset and understand whatever you are doing and what are the pros and cons of it.
Right, right. Perfect, sir. Thank you so much for that. And now, sir, I want to ask a question specifically to you. Recently, you were awarded as a young multi-bagger hunter by Money9. So,
Right.
this question is especially for you. How do you hunt? For what is the secret recipe to hunting multi-baggers?
As I told you, I mean, I personally start with stocks that are hitting new highs, and then I move on to do a basic screening of them. Uh, and then whatever the stocks are left, I try to find patterns in them. These are fundamental patterns such as promoter change, management change, uh, a tiny company which is leader in its own niche segment. Then it could be demerger in a sizable company and so on. So I try to find these patterns in the companies, and I also believe a lot in scuttlebutt. So a few of my winners, big winners, have been due to scuttlebutt, which is going to the ground, trying to understand what is happening, talking to dealer, distributors, suppliers, and so on, and trying to figure out what is happening at the ground, and that kind of gives you a lot of confidence. uh, Although it can make you biased as well, but then you have to connect the dots with the numbers and those kind of things. So all of these things combined, that is how I do my research.
Right. Sir,
And
इसमें yes,
yeah,
yes, sir.
yeah, yeah, sorry.
नहीं, नहीं, please continue. Sorry for interrupting you. Please continue, sir.
No, so I was saying that this is the only method that I follow. So I mean, for all the questions that you talk about methodology, the answer will be the same, because this is the only method that I follow.
Right. Sir,
Yeah.
method is like what you described is like pretty simple, and I think even I can follow it. Maybe I'm honest confession. I think quite a few of our listeners already have heard me saying this a lot of times that I'm still very new to the markets and still learning. I've been lucky to
Right.
have been able to
All
get to
of
the
us are
opportunity.
learners.
Yeah, but I've been very lucky in the sense that I get to talk to you and ask questions one on one and learn from great people like you. But so one issue with a multi-bagger, so start, like finding out a multi-bagger, maybe okay, strategy works, but conviction and then holding on to it. Like मेरे को लालच आने लगता है कि यार ठीक है 50% gain आ गया, let me book it. Or maybe थोड़ा सा वो गिरा तो फिर वो panic आ जाता है कि maybe I was wrong. So how do you hold on to that conviction is something I also want to understand the psychology behind it.
I think that happens to all of us. So as Vijay Keria sir also says that it's not like the day one you buy the stock, you know that okay, this is a multi-bagger. You feel that okay, this could be a multi-bagger, and as Vijay Keria sir says that you are running with a torch जिससे आपको 100 मीटर दिखता है, and then once you reach that 100 meter, and then you get to see the other 100 meter. So the idea remains that you need to have clarity that why you have bought that particular stock, and what is the kind of opportunity, the size of the opportunity that is there. And then the most important point, as I told earlier as well, is to just write 5 things that if happens for the company, it can help company in a massive way, and 5 things that if happens for the company, it can take the company off the path of growth. And then you keep on monitoring the developments, you keep on monitoring the performance. If the company continues to perform and maybe overperform, under promise and over deliver, then you keep on holding on to that company and you keep on rewarding it. By rewarding it, I mean to say that you keep on adding to your position, you keep on building up. And if the company is not performing, then you punish it and then you reduce your allocation. So I think the mantra remains the same. I mean, all of us do the same things. It's just about more of practice and more of understanding of what kind of things that work for you, what kind of things that does not work for you, which is very personal in nature. Like suppose if I buy a cyclical, honestly, if I buy steel sector stock, I can never ride it even if they become multi-baggers. I have not developed that mindset. But if I am buying a company, a growth story, a secular growth story, I feel more comfortable. I feel more comfortable in holding on to it. So we also have to understand that where we are comfortable, where we are not comfortable, and then you cannot marry every beautiful girl in the city. So you have to let some opportunities go and focus on the opportunities where you feel that you can nail it.
Right. Right. Perfect, sir. Perfect. Sir, I have already got a few questions. I have a lot more questions for you, but I think our audience gets precedence. So मैं थोड़े से पहले उनके questions लेता हूँ, and then if we get some time,
Definitely.
I'll ask my questions.
Sure, sure.
Okay. So one question is by Vinay sir. He wants to know, will you please share some of the best books you have read till date? I suppose regarding related to stock markets.
There are many books. I think first one would be One Upon Wall Street. That was the first book that I read, and that completely changed my mindset totally about stock market because that introduced me to the theory of buy what you see. It's a different thing whether it works or whether it does not work, whatever. But the point remains that I suddenly got this thought that okay, it could be as simple as this, and then it kind of ignited that interest in me. So I would say Peter Lynch books are a must read. Then Mark Minervini's books are must read. One Upon Wall Street of Peter Lynch, Beating the Street of Peter Lynch, How to Make Money in Stocks of William O'Neill. Then you can read Trade Like a Stock Market Wizard. So these are the books that I absolutely love. And one recent addition to this will be Mr. Vivek Mashrani's book. So I believe that if I would have read that book uh, early on in my career, I think a lot of misconceptions would have been cleared. So I feel for every beginner that is a must read book.
Perfect, sir. Thank you so much for sharing that. And honest confession, I am an absolute fan of Peter Lynch as well. And
Yeah.
like he is the way he writes and his quotes, and they are just so amazing.
I would like to add one more point. The thing that happens when we read a book or when we read annual report or whatever is that there are a lot of areas which we don't understand. So Peter Lynch would be typically talking a lot about US stuff and stuff that are more relevant there and not relevant here. So the idea remains जो आपको समझ में आए उतना आप पढ़ो उतना ज्ञान लो फिर वापस उस बुक को पढ़ो एक साल बाद and then you will be able to understand more from the same book because your level of understanding has gone up. The book has the same content, but your experiences you will be able to relate to it with the experiences that have been mentioned in the book. So a lot of times we get discouraged. We pick up a book and we read and then we feel that okay मेरे को तो कुछ समझ ही नहीं आ रहा है. Even if you can understand that 25-30% of the book at the first go, you always have a chance to come back and read it again after a year to grasp more. But the idea remains to just don't get discouraged and keep doing it.
Right. Brilliantly put, sir. Okay. So इसके बाद सर हम लोगों के पास थोड़े से stock specific questions आ रहे हैं. If you tracked
Okay.
any of them, we can have your view. If you don't track them, we can skip them. And
I
of course, for
mean,
our audience,
it will be better that we avoid stock specific questions.
okay, all right,
Please
completely
don't
fine,
mind.
sir. Yeah, yeah,
Yeah.
I absolutely understand, sir. Okay, so audience, please, if you have any non-stock specific questions, please put them in the comments of the tweet that I've just pinned on this space, and we'll try to take up as many as we can. Please try to avoid stock specific questions. We are not going to take them up today. Okay. So next, sir, I what I want to do is जब तक हमारे पास और questions आते हैं, let me ask a few rapid fire questions, and I
Definitely.
okay. So what was the first ever trade that you took? What was the first stock that you ever bought?
The first stock that I ever bought was Nestle. And so my grandfather used to invest in stocks. He used to invest all his savings in stocks. And so when I was in school, I used to ask him that what is it that you do, how do you understand, etc. And he told me that just to do one thing, read the labels of the things that come to our house. It was a simple exercise, and as a child, I was very curious, and I started to read the labels and all. And so I just randomly told him to. Obviously, I was in standard 8. I did not have a demat. I did not have any understanding of the stock market. It's just that as a child, I asked him to buy one share of Nestle for me. and we did. So I would say that was my first trade.
Brilliant story, sir. Okay. Next question is, who is your inspiration in the stock markets? Like one, or maybe a few investors or traders who you absolutely adore and respect and follow.
The first person would be my grandfather, because a lot of traders or a lot of investors which whom I've read in the books, about whom I've read in the books, etc. I don't know what they do from morning to night and what is their lifestyle, what do they actually do, and how they are in person. But I have seen my grandfather right from I my grandfather is no longer there, but I have seen him from morning to night and what he does and how he approaches. So, in terms of hard work and in terms of how I want my life to shape up, it would be my grandfather. Now, coming to the stock market icons and all, so I'm a big fan of Mark Minervini. I absolutely love his approach. I also love the canceling method. So it's not that I exactly follow the same things, but a lot of things I've picked up from there, and that has helped to expedite my learning process.
Absolutely brilliant, sir. Thank you so much for that, sharing that, sir. Okay, next question, sir, is what was the one maybe missed opportunity or one regret or maybe a mistake, or it can be anything that gave you a big learning in the stock markets? You kind of had, maybe you paid a premium for a big mistake that you forgot to put a stop loss, or maybe you saw a stock but didn't buy it. One mistake that you did in the market and that gave you a big learning, basically.
I mean, there are so many. I mean, every day you make mistake. I'm finding it tough to, I'm finding it tough to just name one. So, but if I have to just name one, I'm just getting thousands of them in my mind right now. Every day you make mistakes,
We can do
but
a few.
no, but so. A lot of times, I'll talk about a pattern of mistake. A lot of times, what I've done is, in spite of, say, knowing that a stock has great potential and doing all the hard work, believing in the company, buying a decent size of your portfolio, in spite of that, I've somehow ended up selling the stock because because of getting afraid of how the market might be, and market does not look good, and those kind of things. So one thing that I've realized is, when you find a high conviction stock, and you have done your hard work and done the due diligence, worked very hard to find that much conviction that you build the position, it's very important to stay in the course, and not to sell the company too fast, and especially because of external reasons, that the market looks so bad and this and that. It's better to stay put, and stick with that story. If you have to sell something else, but don't, just because that stock is in positive, don't just go out and sell that. I think this was one of your questions as well. How do you really hold on to multi-baggers, or those kind of stocks? So the idea remains that now I try to go back to my thesis and try to give myself more confidence by reading that again, which makes me believe that, okay, no, I have to hold this particular stock. So I think that is one pattern, and I feel that happens to a lot of us, that because of external events, because of the things that we watch on TV, or because of the things that we I don't watch TV, but in general I'm speaking. But when you talk to people and there's panic all around, you also feel fizzy and you think that, okay, wapas le lunga, but that wapas rarely happens. So you need to think twice before selling your high conviction stocks.
Right, brilliantly put, sir. So next question is, maybe one trade or one thing you did in the stock market that you're still kind of secretly proud of. Yes, I backed this kind of thing. It may be your best multi-bagger or any such incident.
It will be one, not about the stock, but I'll tell you one incident. I had COVID, and it was pretty severe. Okay. And at that point in time, so I am a big believer in routines. So you have to have a routine. If you're a trader, you are an investor, you have to have your daily routine, you have to have your weekly routine, you have to have your monthly routines. So a routine would be anything. Say, suppose, every day. I will look at these 10 factors, or I'll study this one particular company, or every week I'll study a company. Or if you're a trader, you will have your own scans to do. These are the scans, and these are the charts that I look at it daily. So I had severe COVID, and the doctor was actually sending me for the scan, and he wanted to hospitalize me and so on. And in spite of being in that condition, I completed my routines every single day. I used to work for 15 minutes, take rest for 1 hour, work for 15 minutes, take rest for 1 hour. Because I believe, as you said, that these are very simple things, and anyone can do it, like you told earlier in the podcast, that anyone can do it. But I feel मेरे को पैसा ना रूटीन फॉलो करने का मिलता है, डिसिप्लिन का मिलता है. एंड बिकॉज अ लॉट ऑफ टाइम्स पीपल फील कि अरे आप टेक्निकल कर रहे हो, ये हॉरिजॉन्टल लाइन का ब्रेकआउट से पैसा बनता है तो सभी बनाते हैं ना. बट क्या सब लोग वो रूटीन फॉलो करेंगे? विल यू फॉलो द रूटीन एवरी सिंगल डे 365 days? Will you put your alert list every day? Will you make your watch list every day? Will you change your watch list every day? Will you track those stocks every day? So that every day is what differentiates between making money from horizontal line and not making money from horizontal line. So that is something that I can actually say that I'm proud of, that I could manage to do that. And that is the confidence that you carry later on when you trade or invest, that even on worst days, like a lot of people say कि यार ऑफिस से आते थक जाते हैं, कब करे, 1 घंटा कम सो लो. अभी तो इसकी शादी है, भाई की शादी है, बहन की शादी है, 1 घंटा कम सो लो. बट स्टिक टू योर रूटीन. आई मीन, आई एम नॉट सेइंग बिल्ड अ वेरी कॉम्प्रिहेंसिव रूटीन ऑफ 2 3 4 आवर्स. आप आधे घंटे का ही बनाओ, बट डू दैट एवरी डे. इट्स जस्ट लाइक आप लोग पूजा करते हो, and prayers and those kind of things. So you just make that a routine. I'm actually proud of that.
Brilliantly put, sir. By the way, when I said ki anyone can do it, I what I meant was ki
No, I believe that anyone can do it. I took it in a positive way, that
yeah,
anyone
no,
can
but
do it.
what I meant was
But
when you say it, it looks so easy, but it's not.
yes, but it becomes easy, honestly, if you
Yeah,
if you do put in the work. It becomes. I'll give you one example. A
yeah.
lot of times what happens, we all say annual report pado, annual report pado, annual report pado, annual report pado. Now a newcomer who comes, he starts reading annual report of Tata Steel, Reliance, and so on. He does not understand anything. Everything goes above his head like a bouncer. And then he's so scared of reading annual reports, because those reports have so many data points. These businesses have so many verticals, and a normal person might not even be exposed to a steel business or a metal related business, right? Or a oil related business. So what I tell everyone is, you start by reading reports of Inox, PVR. It's not a stock recommendation, right? The reason why I'm telling you that is because all of us watch movies. So when you pick up an annual report of an Inox or a PVR, you will feel very comfortable. आपको समझ में आएगा, हाँ ये पॉपकॉर्न बेच रहा है, ये टिकट बेच रहा है, इस साल इस क्वार्टर अच्छी मूवीज आई, इस साल इस क्वार्टर अच्छी मूवीज नहीं आई, तो रिजल्ट खराब है. एंड यू विल फील at home. You will feel peace looking at the annual report or the presentation, or listening to the con call. Once you find peace, your interest will go up. And once your interest will go up, you will find avenues to study different kind of companies, and you will be interested in them as well. Similarly, if you are following technicals or whatever, that you have to start from something that is simple and then build it up, and not try to straight away go and read annual report of Tata Steel or Reliance and so on.
Brilliant, sir. Sir, when you say it, so it's pretty much. I think the best analogy would be when you see a swan swimming in a pond. वो देख के बहुत स्मूथ और बहुत सुंदर लगता है, बट ओनली द स्वान नोज कि नीचे कितनी जोर से पैर चल रहे होते हैं उसको फ्लोट करने के लिए.
Definitely no substitute for hard work.
Absolutely. ओके सो मेरा रैपिड फायर कैन कंटिन्यू, बट आई थिंक हम लोगों के पास और भी काफी सारे क्वेश्चंस आ गए हैं ऑडियंस के. सो लेट मी
Sure,
टेक दैट फर्स्ट
sure.
एंड सो ऋषभ दोषी सर का क्वेश्चन है, सर कुड यू प्लीज गिव अस मोर इनसाइट ऑन रिस्क मैनेजमेंट साइड.
So again, as I told you, that risk management primarily would be how to sell, right? So first thing that you need to really understand is what is your strategy and why you are buying a particular company. So if I am buying a particular company which I feel could be a multi-bagger, say for example, so what would I do? I would firstly try to understand, as I told you, that what are the factors that are critical to the company. Now I'll track those factors. If anything goes wrong, I'll try to think that is it temporary or is it permanent in nature or will it take a lot of time. If it is temporary, then that stock becomes add-on dips for us. If it is permanent in nature, then you take an exit from the stock, right? Uh, Similarly, if you are doing something on the basis of technicals, then the first thing that would depend is why did you buy that stock? Did you buy that stock for a swing trade, or did you buy that stock for a positional trade, or did you buy that stock for positional investment, not long term or say multi-bagger investment? So if firstly, once you know that, then according to your own setup and according to whatever you have seen in the back test and by observing, then you can take a then you can take a stop loss accordingly. uh, and it is as simple as that. We can complicate it further, but ultimately it all boils down to execution. Now you have to do what you have to do. Half of the time the problem with the risk management is that we know what to do but we don't do it, because of our biases or because we don't want to cut in a loss. Another thing that I do in terms of risk management in my trading that I can share with you guys is there's a particular way that I follow the market. So I believe that this is only for trading. This is not for investments. Okay. So when we drive a car, we first see how is the road, we see what is the traffic on the road, we see what is the weather, and then accordingly we place ourselves. Similarly, when we are trading, we need to understand how is the market, how is the pitch, how are the bowlers, etc. And then we have to place ourselves, and then we have to think how aggressive or how defensive I have to be in my trades. So this is one thing that was there always in my mind, and then I figured out a very simple way. And this is not something that I've copied from here and there. It's just a simple thing that I particularly use, and I watch it every day. So I wanted to understand the pulse of the market. So what did I do is I started looking at BSC small cap, because that's a very wide range of stocks that are there. If you look at and if the market is healthy, the small cap world will be healthy. That is what I believe. Now that is why small cap. And then I took a 30-day moving average, simple moving average on that, and I started using ADX. As simple as that. Just a simple, very basic setup which gives me excellent inputs as to how to speed, at what speed to trade. If the market is above 30, if the BSE small cap index is above 30, I take trades on the long side. If it is below, then I believe that the trend is down. It is as simple as that. And if the ADX is speed, ADX does not really tell you that which direction the stock will move. ADX is just speed. So if ADX is above 25 and the trend is down, means the trend is down in a fast way. If ADX is above 25 and the trend is up, then the trend is up in a fast way. So then I've categorized it into four categories. So if the price is above 30-day moving average and ADX is above 25, that is the time I'll be most aggressive. I'll buy breakouts before they happen, right? I'll preempt them looking at my setups, and I'll probably, take 10 trades a day. But if the ADX is above 25 and the BSC small cap is below 30, that is the period I'll be very cautious. I'll not trade only. I don't want to make money because I know जितना वो एक हफ्ता माथापच्ची करके मैं पैसा बनाऊंगा, उतना आई मेक इन 1 hour, when the market is favorable and moving average के ऊपर है BSE small cap index and ADX is above 25. So it's just a small way that I use my risk management and try to understand that whether I have to be defensive or I have to be aggressive. And the other two scenarios are ADX below 25 and moving average above 30 or moving average below 30. So all of you guys can go, you can do the homework. If you have any doubts, you can reach out to me. My Twitter messaging is open, And you will see that, just by incorporating that, you will not be fighting with the market. A lot of times people say that, I am using the same setup, वही लाइन मैं यूज कर रहा हूँ, सब वही कर रहा हूँ, तो ये ब्रेकआउट पैसा क्यों नहीं दे रहा है? क्योंकि वही बात है कि वो पिच ही ठीक नहीं है, वो पिच बाउंसी है, बॉलर बहुत फास्ट है, यू हैव टू डक, यू डोंट हैव टू टेक द ट्रेड देयर. So that understanding has to be there, and we have to figure out our ways. Like, nobody came and told me to use this method, right? We have to figure out what works for me and what does not work for me. And I believe a lot of you will feel that this does not work for you, so don't use it. If you feel it works for you, use it. I think
Right.
the answer became a little extended, and I hope a lot of you did get the gist. So
Yes.
just try and do it as homework, and you will. I am sure that you will benefit out of it.
Definitely, definitely, sir. Thank you so much for sharing that. It was absolutely not long. It was very much detail, and thank you so much for taking out time to explain that much in that much detail, sir. Okay. So next question. ठीक है. दिलीप sir का question था about what should be the concentration of stocks in portfolio, which we already discussed.
Yeah.
Uh, दिलीप sir, हम लोग after the podcast we'll release a recording on this channel. You can listen to the recording maybe. Next question, sir. Dinesh sir ka hai, and he has asked, sir, portfolio size increases with time. So how to trade with, let's say, 30 lakh capital, just as example. So this is an interesting question, I believe. So maybe we start with 2 lakhs and we convert it into 10 lakhs. So how do you deal with an increasing capital? And since you are the king of multibaggers, I would love to know from you, how do you deal with an increasing capital? Does your portfolio size increase? Does your the number of stocks increase, or maybe in general you do you reserve some capital? How do you deal with an increasing portfolio size,
So,
basically?
firstly, I feel portfolio size never increases because you always have 100% of allocation. So you have to stop thinking in terms of rupees or the amount. You have to think in terms of allocation always. So when I'm sitting down and thinking of a particular stock or my portfolio, I'm always thinking that, okay, this stock deserves 7% allocation, this stock deserves 10% allocation. Here I have less conviction, I'll put 2% here, 3% here. And you just forget about the amount of portfolio, just focus on the allocation. Now, yes, there are few typical problems that come with that. When the size increases, if you are buying a micro cap, you cannot buy that much. So those are individual cases which you take note of individually, separate cases. But otherwise, my idea would always be that just think of your portfolio as 100%, and then you allocate. It's as simple as that, because once the amount comes into picture, then a lot of blockages will come into mind. Because then you will think that, oh my god, 5 लाख रुपया मैं डाल रहा हूँ इसमें, 50 लाख डाल रहा हूँ इसमें, 5 करोड़ डाल रहा हूँ इसमें, whatever your portfolio size or whatever your particular situation is, and then that will block you from growing your capital. फिर आप डाल ही नहीं पाओगे, आप वो एलोकेशन का मजा ही नहीं ले पाओगे, you will not be able to squeeze the best out of equity markets. So I think we all need to stop thinking in terms of amount, and we need to think only in terms of percentage allocation.
Right. Brilliantly put, sir. Thank you so much for that. Okay. सर नेक्स्ट क्वेश्चन हम लोगों का एक ऋषभ सर का फॉलोअप क्वेश्चन आया है. अनदर हिज क्वेश्चन इज हाउ मच क्रेडिट रेटिंग इज इम्पोर्टेंट एज एन इन्वेस्टर?
I am not a big fan of credit rating, honestly. I don't give a lot of importance to it. Although if the credit rating agency report has some data point which can be beneficial for me, I will use that data point for my analysis. But otherwise, I don't place a lot of importance on credit ratings.
राइट. ऑसम ऑसम सर. ओके, सो इसके अंदर हमारे पास बहुत बहुत सारे क्वेश्चंस हैं विच आर सेक्टर स्पेसिफिक. सो फॉर दोज क्वेश्चंस आई थिंक वी ऑलरेडी डिस्कस थोड़ा बहुत हेडविंड्स इन सेक्टर्स इन द बिगिनिंग ऑफ द पॉडकास्ट, लाइक विच
Right.
if you see any winds changing. So for those people who have asked on sectors, which sectors is he bullish on, or maybe none of that was buy or sell recommendation. But if you want to understand what sir is looking at in the market as an analysis, his personal analysis, so you can maybe listen to the recording there. So, sir, we are
Perfect.
kind of reaching our hard stop for the time limit.
Yeah.
But before we go, I would love to ask one final concluding remark, maybe, or one advice, or something that you would want to, a parting message that you would want to leave with our audience and me personally tonight, sir?
The only message that I would give to everyone is that equity market is a fabulous place. Although you might not feel that being in the markets from last 6 7 months, but I feel that patience is rewarded here, and hard work and whatever research you do, everything will pay off if you're doing it in the right manner. So don't be discouraged by day to day movement, and don't feel that this is not a place for you. The only thing that I would tell everyone is that all of us learnt ABCD. All of us learnt 1 2 3 4, that are numbers. So all of us can do anything in the world, because that is the ability the God has given us. आपने लिखना सीखा, आपके पास वो base था. You knew the alphabets. But what was the base of the alphabets? You could calculate because you knew numbers, but what was the base of the numbers? So if all of us can know, if all of us can learn numbers, if all of us can learn alphabets, all of us can do everything, and all of us can learn everything. It's just about putting in the hard work, putting in the right work, and believing in yourself. Honestly, it's not a motivational lecture that I want to give here, but this is the fact, and I always say this, that it might be that someone might take 1 year, someone might take 3 years, but the fact remains that all of us can do it. All of us can do it. Maybe we haven't really found out our own niche. So it's just like when we say that sometimes we say, right, that if Sachin Tendulkar would have been forced to sing, he would have been a failure, right? So in markets also sometimes we don't find our own niche, because in markets also there are so many different things. It is the stock market, but in the stock market also there is trading, there is investing, there are different kinds of investing: growth investing, value investing, maybe then trading may long term, short term. Somebody is good in FNO, intraday. So just try to find out your own niche, try to learn from whatever sources you can, and I believe market is a place for every single person. Maybe mutual funds, even figuring that out, that okay, mutual funds are good for me and I don't want to put that mind into individual stocks. That is also an achievement, that you have understood yourself and you are prepared for the wealth creation journey. So it's more about understanding yourself than blaming the markets.
That's beautifully put, sir. Right. So this has been our time. Thank you so much, first of all, everybody in the audience for sticking out with us. There were at one point, I think there were over 200 people. Right. Even now, there's more than 150 people listening to us for
Wow.
almost an hour.
Wow.
So
Thank you
this
so
has
much,
been
guys.
this
Must
has
have
been
been a
amazing.
tiring day.
Nahi, sir, this was an and Soumya sir, this was honestly a very very nice session. It was very interesting listening to you. Thank you
Thank you
so
so
much
much.
for taking out time for us and actually talking to us and sharing your experiences and learning with us, sir. This was absolutely smashing.
Honestly, it's my pleasure, and thank you so much for inviting me. Also, I think you should have your own. You should have a session with yourself also, because I keep seeing your name in the leaderboard. So maybe people should also get to know what are your secrets of being on leaderboard every time.
So my secret honestly has been just listening to experts like you. I have been so lucky in getting to host this show where I get to learn from all the experts of financial Twitter experts, and they tell me every day. It's like a personal tuition and a personal coaching class that I get to attend every day, and that's all there honestly is.
Chalo,
Right.
perfect then. It
And
was
so before,
wonderful
yeah.
interacting with you guys.
Awesome. And sir, one more thing I would love to matlab, ask you, request you is please do allow us to host you again. I really cannot wait for yet another session. This we had to stop because of a hard stop, but I would love to host you again and learn more from you.
Most definitely, we'll definitely plan something again in future.
Awesome. Awesome. Thank you so much, sir. All right, everybody. Thank you so much for your time. Have a really good night and a profitable day tomorrow. Bye bye.
Bye bye.